Let's look at Ralph Lauren. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. We will go to one of the economic signals. I have called this one euphoric spending. So let's go here. So these are companies that provide products and services that they are low on the the priority list. They simply are. So hence they are not simply discretionary spending, but they are highly discretionary. So this theme is very interesting because it can give us an early sign of consumers changing their spending behavior. So here you see Ralph Lauren. They make clothes. 113% here from the low, so a big move. I pulled back 6% so far. I did do an analysis in which I was bullish back here on the 22nd of November 2020. But things they can change. So here we have their website, Ralph Lauren. Very, very famous brand, great clothes, but on the higher end of the price spectrum. If we go here to the charts, this is the big picture, weekly data points, and we have all the history we have. So what jumps at me is that this stock, it is very, 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 very discretionary. You see that here it had a big surge. You see that Ralph Lauren, it peaked, around July 2007, and that was way before, the global financial crisis. The housing bubble really developed. When we look here at the dot-com bubble, you see here that it peaked and was a bit messy throughout that period. But the interesting thing here about the previous bear market is that it went down very fast. Here you see, during the uncertainties of 2013-15, in which the market was a bit more messy, you see that Ralph Lauren reacted very, very negatively to that. And we had a whopping, from the high here, a whopping minus 68-ish% from the high. So this is definitively one of those buy low, sell high stocks. So if we look here at the most recent development, we do have some very interesting time cycles. You see that, generally speaking, there is some reliability to the time cycles. Not surgical, but there's something here. The time cycle suggests that we should expect a pullback heading towards June. When we compare the time cycle, which projects weakness heading towards mid-ish June of this year, that matches very nicely here with the seasonality. Ralph Lauren, over the last 20 years, it tends to be significantly weaker here in June and May. So May-June is a weak period for Ralph Lauren. So there's a nice match here between the time cycle and the seasonality. So that's very interesting. That's very relevant. You see here that July and August, they tend to be stronger, and that's nice. So there's a very nice match, basically. So that is the time cycle. There is, however, from a more bullish perspective, there is a major technical pattern in development that is certainly has a lot of bullish potential. So you see that it has been forming this. Let's draw it like this. You could make a strong case that we are forming potentially a very big inverse head and shoulders pattern. And there's a decent probability that this move here will be mirrored going forward here. That is something that if you look at the past history of Ralph Lauren, you see here that this rally here was mirrored by this pullback. So that's how we formed, this head and shoulders pattern. If you look here at this rally as an example, it was mirrored by this pullback. to a very significant degree. So even see, when we look here at this top, you have the mirror effect. You have this spike here, and then you have a spike here, spike here, spike here, 2. So there is this, it has a history of doing that. In line with what we saw with the time cycles and the seasonality, it makes sense. In the same way that we did have this pullback here, and like this, the mirror effect would suggest something like this going forward. Of course, there's no guarantee that's going to happen. We gotta be a bit careful about projecting future developments, but we have seen it do stuff like that in the past. When we look here at RSI and the PPO here on the weekly data points, we have reached levels that have triggered, prior pullbacks. So that's relevant. And that corroborates the other data we have seen. Here on the daily data points, PPO on the daily, RSI on the daily also showing signs of excess, notwithstanding the pullback we have seen. And Ralph Lauren, it has a very, very, very strong tendency to have substantial pullbacks. All of a sudden, minus 33%. If you look here at some of the more recent developments, like this pullback here, all of a sudden approaching minus 14%. So that is the history of the stock. Looking here at Finviz, they draw the trend channel. We were rejected here. There is certainly some reliability to this channel. Looking at the price targets, so the current price target is $129-ish. So from the current price, the analysts suggest minus 2.44-ish downside. Nothing dramatic, but given that the analysts have, a very strong bullish bias, it is interesting to see that even during this very euphoric, Fed-fueled time, the analysts simply cannot bring themselves to push the price target higher. Coven, they have recently gone a bit nuts though. They have $152 price target, so they've made a big jump. But yeah, if you look at some of the other names, you see that it is quite the range. Though most have price targets that fit very nicely with the mean, which is 129.66. Saks.com, they do have a number strong buy on Ralph Lauren. See value score, see growth, the momentum. So the style scores are mediocre. They are more signifying that we are approaching fair value for the stock. Industry rank, top 16%. That is obviously bullish. There's no dividend. So Saks is more bullish, but not like roaring bullish. So to sum up my take here for Ralph Lauren, the thing that we do have this major super long-term technical pattern, inverse head and shoulders pattern. That is, long-term, if it plays out, it is bullish. And there are some, fundamental signs in a more bullish direction as well. Though currently, because that is the thing, right? Given the current sales of this company, the current stock price is a bit excessive. That is what most of the analysts think. And when we saw the time cycles, the seasonality, the overbought indicators, there's many signs that suggest that there could be more downside opportunities for Ralph Lauren. So basically, looking at the coming months, there are more reasons to be bearish than bullish. However, as time progresses and sales, if they continue to do well, they catch up with the stock price, as such that it can justify the market cap that the market has given it, then, we certainly could see that inverse head and shoulders pattern play itself out. So that was a very long-term technical pattern that pushes us into, 2022. Okay, to get access to all the research, you just go here and click.